Good afternoon, everyone, and welcome to our demo of LevinPro's one-of-a-kind senior care property valuation tool. We opened this webinar to our growing family of senior care investor and LevinPro subscribers, but also trial subscribers. So welcome to you all. We're very happy you joined. We know how competitive it is out there for deal making, for lending, just about everything. And we are constantly trying to put out data and information that will help you all with your market knowledge, deal making needs, and making sound investment decisions, but with an ample dose of realism when it comes to the opportunities and challenges facing the sector. We at the Senior Care Investor want you to succeed. And if we can help at all, that is why we do what we do. And I'm joined by the legendary Steve Monroe, who has been at the forefront of opining on the senior care industry, accurately predicting market movements, and having his finger on the pulse of M&A and property valuation trends for nearly 4 decades. Welcome, Steve. Has it really been 4 decades?
Yes, it's 4 decades next year, 40 straight years. And
How are you feeling about that?
I'm feeling very good because there's not many people like me who have many years. But thank you for those kind words, and thank you for including me on in this important discussion. And just want to say I'm very proud of you and your team for getting this product ready to roll out. I think it's going to be a great thing going forward.
Well, thank you, Steve, and thank you for the last 11 years too that I've been here. It has been a lot of work creating this valuation tool, but I really can't emphasize enough just how excited I am to show it to everyone today and to really walk you through it. I just want to kind of first explain how we originally came to the idea. So everyone knows that in the senior care industry, there is a bit of a data transparency problem, at least compared to other real estate classes. Really, the only centralized space for deal comps is us at LevinPro, which you can see here on the screen. That's our deals database. But emblematic of the deals that you're seeing, over the last 10 years, we have noticed a significant decline in the information that we are allowed to publish, from prices to cap rates to other property details and locations. It's mostly due to increased sensitivity among the buyers and the sellers. After all, why risk more information out in the world and potentially in some misleading headlines? We know there can be many of those if you don't have to, and we certainly get that. However, because the industry and any potential new entrants coming into the space need accurate pricing data, we seek it out from our many friends in the brokerage, lending, and investment worlds on each transaction that is closed, and most happily oblige, which we are always grateful. And as an example, on the page here, virtually all the transactions domestically, there are a couple of foreign deals here, but all the domestic transactions, we will at some point be able to at least confidentially get all of the information on these transactions, thanks to the help of our friends in the industry. We get the prices, we get the financials, the properties, and any other transaction details that we can verify ourselves, and we put them into a separate secure database, which we have used to over the years provide dozens of average pricing metrics in our annual senior care acquisition report, which is available to LevinPro LTC News and Pro subscribers. But we were thinking of how our subscribers and the industry really could further benefit from just the mountain of confidential data that we're sitting on over the last several decades, especially if publicly available pricing data and useful comps are shrinking. So that is the impetus behind us creating this valuation tool. It's to enable subscribers to get useful comp data for the specific deals that they're considering or the properties that they want valued for whatever reason. After all, who really cares about the national average of assisted living prices, which includes all properties from A quality to C to well-performing properties to the struggling ones, when you're really only targeting a specific subset of the market? You would theoretically only want data from that subset, and that is what this valuation tool is striving to provide. And I think it does a good job too. We consulted with a data scientist to take a machine learning approach in developing a model that could take all of our historical transaction data, maintain confidentiality, identify the correlation between price and certain property or market attributes, and then root it with senior care specific market context, which then outputs an estimated price per unit for your desired property. If you're curious at all about all the details on our methodology, a white paper is available here at the top of the page called Estimator Guide. That has a lot of detail surrounding how we developed this model. We spent countless hours of work to compile the data, clean it, transform it, develop the model, experiment with it, and then test it. And ultimately, at the bottom of the page, when you click calculate estimate, it may seem a little trivial when you just click on a button and you get a result. But that result has resulted in a 93% R squared, or just how much our model explains the variability of the outcome based on 2025 property values. So we're very proud of that. We're, of course, looking for new ways to improve the tool going forward to make it more useful to our deal makers and owners in the seniors housing and skilled nursing sectors. And that means we also want feedback from the people using the tool. So everyone on the call today, we look forward to hearing your thoughts on it. And what about you, Steve? Any thoughts?
Yeah, as Ben said, there's never been something like this in the market, and it should be used and viewed as a tool to help buyers, sellers, lenders, appraisers, and anyone else to get a feel of what an asset is worth based on the recent market activity. Remember during COVID and just after, when assets were, they were being sold, not as a cap rate deal? Think about how this tool would have helped the investment community to understand market value when there is really not much to go on from a cash flow basis. And yes, even on a stabilized cash flowing property, you can just apply a cap rate, but this valuation tool considers several other factors that can impact value. This is especially true for those properties that are losing money. And while there's fewer of them today than there was 2 or 3 years ago, we still have some that are either losing money, break even, or just barely profitable. We do our annual M&A stats in the senior care acquisition report, but as I've always said, the average that we report is a starting point to see whether your property should be worth more or less than that average, and why. Now, with this valuation tool, all the other factors can be applied in coming up with a value for your property, in addition to what other assets have been sold for. While an average may be meaningless for your particular property or situation, this tool goes way beyond that simplistic approach. And I say simplistic because an average is an average, and this gets much deeper than that. And remember, this is just one tool in the toolbox. And while a great one, a broker opinion of value is needed because, they have boots on the ground and will probably see the property when they give their BOV. And this is true for appraisers as well. Ben, any thoughts on getting drones up in the sky to take pictures so that we can compete with appraisers?
Well, I think you bring up an overall point of we do want to keep improving this tool and make it more useful, but there are just going to be factors that contribute to the value of a property that we are basically never going to be able to measure with a tool like this. And so that's why you do need that on the ground expertise to come up with, let's call it a final opinion of value. But we think that this valuation tool is a great starting point. It's another data point that you can use in making a case for any transaction that you want to do.
And before I send it back to you, Ben, an good industry friend who's been not quite 4 decades, but maybe 3.5, just texted me and said, "Do I have scotch in my coffee mug?" The answer is no. Back to you, Ben.
What a relief. Thank you, Steve. Well, I thought our first kind of test of this tool, let's see how it does on a transaction that is not fed into the tool. So the tool is only based on transactions up to June 30th. So that was our cutoff when we wanted to stop giving it new data to be trained on. So let's see how it does on a deal that closed in August as an example. So I have it here. It's a smaller, older assisted living property outside of Detroit, Michigan that sold on August 29th. I'm hiding the price right now because I just want to see what our valuation tool says based on the parameters of that deal. So it's very simple how to use it. You enter the units. This is an assisted living property. It was built in 1980, so certainly on the older side for assisted living. We have the 10-year treasury rate here on a sliding scale because we know just what kind of impact that has had on valuations over the last several years. It was a Michigan deal, so North Central region, and then select Michigan, just outside of Detroit, so it's a primary market. If you want a valuation from today, you put in 2025 as the sale date. And then for the revenues, we had 2,346,000, and then the property was operating just under break even. So let's just say it was minus 25,000 for the purposes of this test. And then we also put in median household income really to act as a proxy for the affluence of a given market, which we know does have some impact on valuation. We do want to kind of further see how we can measure kind of the strength of a market when you're looking for a valuation. So you click on Calculate Estimate, and then this PDF button appears. You can hit Download, and then let's see what the valuation is. All right. So you can see here all the parameters that you entered, and it spat out 3.55 million or 64,500 a bed, roughly. Let's go back to the actual deal. All right, it was 3.3 million and 66,000 per unit. Not bad, Steve. What do you think?
No, that's obviously well within that 10% parameter. So that's quite good. But how does a tool differentiate or deal with a property? Because the property was losing money. So want to take a look at it and see what happens when it's making money?
Yeah, so this is kind of one of the strengths of the tool is that you can use whatever financials you want. If you want to see how the value is based on its trailing performance, you can do that. But if you suspect that the building really should be operating at a level, far above that, then you can see how the valuation would be impacted. So I'll put in, it's kind of practically overnight, it's making 600,000, and let's just say it's now up to 2.5 million for revenues, and we'll just keep occupancy the same. Let's just see in this example how the valuation changes. So you just click Calculate Estimate again. It's going to generate the PDF. And there you go. So you can see that the valuation went from about 64,000 per unit to almost 90,000 per unit, just based on the fact that it's now making money.
So a 50% increase in value, roughly, based on losing money or break even to making money. I mean, that makes total sense. And I guess that value is still low at what is that, 89 a unit? And is that primarily because the age?
Yeah, so I would say that what this valuation tool is taking into account is the size. So it's a smaller, one would say, non-institutional building. And then certainly its age, that it's older than the vast majority of assisted living properties that have been input to the model too. So it's taking that into account. Also, the margin is perhaps not as healthy as it could be. So that's certainly a factor too.
And then how does the program deal with a property, let's say, losing money in a good market versus losing money in a bad market? Can it differentiate at all?
So that's where you can play with the parameters of this. So if you want to determine what a good market is, what I would suggest is you can play with this median household income to suggest that the market you're in is a highly affluent market. But also, if you think that a particular market that you're in, let's say it's a tertiary market, but it's in a really great neighborhood, a lot of strengths to it, then maybe you can take it up to secondary or primary and see how kind of market strength would impact the valuation in that case. Also, if you happen to know that renovations have been done on a property that really took its effective age up, then you could also play with this year built field. And if you invested $1 million into this property and you took its effective age up to 2005 as an example, then that would have an impact on value.
Can you do that and just change that? Because now you have making 600,000, take it to 2005 and see what it does. I'm just curious. We did not rehearse that one before.
Let's see.
See if it goes above 90 a unit.
There you go. Went up to
my
109.
God. So wow, that age, yeah, okay. So it's not just the cash flow, the age. That's 25-year difference. That's a big difference.
I will say that the most important factor is the cash flow of the building, but age is one of the major ones. Yeah.
Good.
So we just took a look at what a kind of lower quality kind of Class B, Class C assisted living building would be. We know that there's a lot more Class A, well-performing assisted living and independent living properties coming to the market now. So we wanted to make sure that the tool could adapt to that, even if there aren't as many transaction, comps from the last couple of years that it could be trained on. So we made a few tweaks to the model just to put a greater emphasis on some of the more recent properties. But I just want to kind of take a theoretical high-end property in our backyard in Connecticut and just see, in Fairfield County, Connecticut, and just see what kind of value this tool can go up to if the property is very well performing, it's newer, and it's in a good market. Oh, let me put secondary. And this building theoretically is operating at a very strong margin, but there could be some room for improvement. And it's in an affluent area, 120,000 for the median household income, and let's just put occupancy at 95%. So the previous example in Michigan, it was around 64,000 per unit, and then changing these parameters, we can see. All right, so if this is a theoretical, we know of a property sale that happened in New England that maybe was in this ballpark, but we can see here, based on those changes, the average price the price per unit for this soared above 500,000, which is probably a little more in line with what properties of that quality would command in this market, if not a little higher.
So the valuation tool then, because we're coming out of an M&A recession, coming out of lower values, all that kind of stuff. But that does not, if you've got in a good market and well performing, that will not discriminate against a potential property that's making a lot of money. In other words, the past won't hold a current value estimate down.
Mm. Yeah, and it really does take a premium, or it puts a premium on its financial performance. So that is a major factor. But the fact that this is a newer property and in a historically strong state, then we can see the value really just jumped here.
And then what do you think? You have cash flow is strong, occupancy is high, and it's 4 years old, so it's new. What do you know? What the kind of like the balance is at with the tool? I know it's all programmed and all that, but
you mean like which parameter has what impact on price?
yeah, obviously EBITDA is the biggest, and it's very profitable. But
so that you can find entirely in the white paper that we have here. But NOI would have the largest impact, and then that would be followed by revenue, and it takes operating margin into account as well. And then it would be age and occupancy would be the next factors.
Got it.
Yeah.
Okay. Do we have time to just to go into that and change the age or change the occupancy? Just to see.
Sure, let me just show just quickly what the white paper looks like. So if you want any details on how we created this, there is a lot of detail. Okay. But I want to make sure we have time for
right.
a couple of skilled nursing examples, because we know just how irrelevant a national average for skilled nursing prices can be. We know that state by state, there are completely different regulatory environments, reimbursement environments, and other factors that make the price of a skilled nursing facility in West Virginia completely different from a skilled nursing facility just over the border in Ohio. One thing I do want to bring up, though, is that in a lot of these states that have recently pushed through rebasing, significant Medicaid rate changes, in a lot of these states, the value of these facilities overnight has gone up by 20, 25, 30% in some cases, just because of the change in Medicaid reimbursement. But also, if you still have to be a good operator to be taking advantage of that as well. And because this model is trained on actual closed transactions, we may not have enough deals in a lot of these states post the reimbursement change to really factor that in. So what I would say is that the tool has the flexibility that if you know that post rebasing, your facility is going to be operating, is going to go from losing money to practically overnight making a certain amount, then you can play around with the value of the facility pre and post the rebasing. And it's still going to take into account certain state-by-state characteristics that it has noticed in our historical data. So I want to use an example of a state that recently has gone through Medicaid rebasing, and we have seen values really soar in that state. So this is just going to be a theoretical facility. You can select skilled nursing as the facility type. You also can do independent living, CCRCs, and active adult. We have all that data in our database. Typical age for the SNF will be 1980. It's 350 square feet per unit. That is how we're measuring it in this tool. So,
per bed.
Per bed, yes. Oh, great point, Steve. Skilled nursing, we go by bed. And then select Kentucky. Market type, let's just say tertiary, 2025, you want the most recent valuation. And let's just say pre-rebasing, this facility was making 10 million, but losing 500,000. And it was a decently affluent market, but occupancy was, maybe typical of some SNFs in that area. It's like 74%. Just calculate the estimate, very easy. And there you go. So pre-rebasing, this facility might have gone for 60,000 a bed. I'd say meets the smell test for me, but let's just say overnight, now it's all of a sudden making 500,000. And let's just say that revenues ticked up to about 12 million. We're not going to change the occupancy because this is a change in how it was financially performing. So let's just see. Before, it was around 60,000 per bed. And now we can see overnight, it jumped by about a little over 30% to 81,000 per bed, or 82,000 per bed. So this is something that, if you're interested in only certain states to get comps for skilled nursing, or just to get an understanding of where values are for skilled nursing facilities in certain states, then the valuation tool kind of gets you pretty close to there. Any questions, Steve?
So for this, I mean, because nursing homes are, I think, a lot harder than private pay, assisted living, independent living. But in this particular case, 1980, God, that's like 45 years old. That's pretty old. So there are a lot of properties that old properties that look like they're old, and then there are old ones that look like they're maybe 10 years old. So if you, like on this one, if you change, let's just say that was the case, and you already changed the revenues and EBITDA. So let's just say it looks like it's now effective age of 2010, which
substantial innovation.
That would be very new. But let's just see what happens.
Yeah, let's see. Not rehearse this one either. Let's see. All right. So before it was 81, and now took it up almost to 100,000 a bed.
And I guess that makes sense. I mean, if it was really new, then it would depend on the case mix, but it would be probably 120, 130,000 a bed, something like that.
Yeah.
But anyway. Yeah, so just
I mean,
that one assumption tweak, there you have another 25% increase in value.
mhm.
Interesting.
Yeah, and we are, for the skilled nursing transactions, we are certainly looking for new ways to, measure the value of a facility, whether that be the area wage index. We know that has a pretty big impact on the reimbursement rates the facility can get, but also a case mix. We want to just find new ways that we can more accurately measure the value of a skilled nursing facility going forward. In addition, just keep adding more and more transactions as they close in the new kind of reimbursement environments state to state. So we'll keep doing the work to fill in that data too. We did get a couple of audience questions. So how does this tool include or not include influences of portfolio sales? So in this tool, we only trained it on deals up to 3 properties, because we wanted, well, actually, sorry, only up to 2 properties, because we only wanted the tool to essentially generate the value of a single facility or a single community. And also we just had more granular property financial details, property details on the single and double facility deals as opposed to the portfolios. So we wanted to have a lot richer data fed into the model too. So what I would say is it does not take into account influences of portfolios. If you do think that there should be a portfolio premium, then what I would recommend is, you can get an individual valuation for each property. And if you want to apply a 5%, 10% portfolio premium, you can, but it's currently not trained on the influence of portfolio deals. And also another question, is the white paper
Wait,
available?
before the, and don't forget, we've had, I think, 2 times in the past, maybe 3 times in the past 30 years where there was a portfolio discount.
Mm-hmm.
It's not always
Yeah,
a pretty.
and certainly in the last several years too, we saw some of those. So um, currently does not take into account the influence of portfolio sales. And also the white paper can be available off this website. So following this, if anyone who is attending this demo is interested at all in testing the tool on an actual property themselves, or just wants to learn more about the tool, learn more about the LevinPro platform, please reach out, sign up for a demo with anyone on our sales team. They'll be reaching out afterwards to see what times would work. And they have the white paper, so they can certainly send that along. And I can send it to anyone if they want to reach out to me just by email. Happy to send that along too. Steve, any final questions?
Um, well, probably a long one on the old days when the county nursing homes were being sold. They were losing 2 million a year, but they were selling for outrageous prices. So that's just a case where you plug in your forecast. But I guess in looking at this tool, I sit there and say, okay, because you get brokers and appraisers are kind of battling their customers sometimes, and a broker will say, "Oh, I think your property is worth 100, 200 a unit." Oh my God, you're way off. It's 300 a unit. How do you get that? So they can use this tool I mean, it's literally a backup to what they're doing, and they'll plug in their potential client's actual numbers, and then come up with a value. And if it's close to what the BOV is, well, then they've got a second opinion very quickly,
And it's backed by real data. So
backed by real data.
it's an extra data point that you can make the case. It makes sense too.
Do we have
So
time for another
absolutely.
question, or no? Are there any more
Uh,
questions?
I don't see any other questions right now. So,
Okay.
well, just another reminder to everyone that if you are at all interested in testing this out yourself, please reach out for a demo with anyone at our LevinPro sales team. You can reach out to me by my email. Happy to answer any questions on this too. And of course, any feedback you have on things that we can add to this tool that make it more useful to you, we are all open ears to that. And finally, a continued, a thank you to everyone who is helping us collect the data that, we include on our public site, but also go into this confidential database to generate some meaningful, accurate pricing data that the industry needs. So thank you to everyone who is continuing to help us with that effort. And thank you, Steve. Thank you for hopping on today.
Thank you, Ben. Great job. And again, congrats on creating this.
Thank you, Steve. And we're looking forward to the future too. So we want to make it better. All right.
All right. See you, everyone.
Thank you, everyone. Bye.